any holiday that causes like a bank holiday, specifically with the dollar, I like to wait and see how the market digests the break, okay, or the lower volume that comes into the market just ahead of the holiday, or if there's a abbreviated trading session. I don't really look at that as noteworthy or pressing in terms of the analysis. I've fallen victim to that stuff before, and I've learned this as a reason for me to have rules of engagement, things that would limit my engagement or at least frame it in the context where at least I know what I'm doing and why I'm not doing something. And if you don't have those things built into your model, you really don't know what you're doing, much like a stop loss. If you don't use a stop loss, you don't know what you're doing. I don't care if you're saying that you're profitable and you have a broker statement that says, look at this, I've made XYZ% in the last 2 weeks, 3 months, whatever. Playing that game will eventually burn you. So you have to have a stop loss. You have to have rules to know when you're not going to be doing something. And it doesn't matter who agrees with it. It's your business you're running. Do you think Amazon cares what everybody else's opinion about how they do their thing? There's a lot of people that are very opinionated about how Amazon runs as a company. They don't pay their people enough. They don't do this. They don't pay enough taxes because they're offshore. Whatever. They're not concerned about it. So you shouldn't be concerned about anybody else having their opinion about how you should be trading your business. Stay in your lane. So you have to have rules so that way you stay in your own lane and you don't worry about anybody else. You don't care about what I make. You don't care about what anybody else makes or loses. It's irrelevant because you're not going to spend my money. You're not going to feel the pain and suffering if I take a loss. So why bother with it? And don't invite other people to do that in your own trading either, because they're not going to be sympathetic to you. They may appear on face value, but believe me, they're down deep. They're loving the fact that you're suffering just like they are. Although yours might be a very momentary drawdown or a stop loss being hit and you have a losing trade. So to prevent yourself from having all those pitfalls where you feel like you got to do those types of things, start being critical of other people or yourself in your own journal, which you shouldn't do. You have to have rules. You have to have limitations. You have to have some kind of structure as to why and when you do or do not engage in price. Is the price action clean? No. We're not having that because we're coming off the heels of what? A holiday. There's opportunity. There's opportunity every single day. There's opportunity all the time. But your opportunity doesn't necessarily mean that's my opportunity. And vice versa. If my opportunity may be perfect for me, may not necessarily be the opportunity for you, even as my student. So that's why it's important for you to bring your own individual, unique personality into this. Because if you don't do that, if you fail to do that, you're going to be frustrated because you're trying to align yourself with the person you're trying to copy. And you don't know what I'm thinking. You don't know what concerns I have. You don't have the time constraints that keeps me from staying with a trade because maybe I'm getting ready to go on vacation. Or maybe my wife said, you spent too much time in front of these charts and you owe me some time. Or my kids say, hey, this is what it's going to be like, Dad. We got things to do. Or something else that's unexpected comes up. So it's important for you to have an understanding about what it is that you're trying to do as a unique individual, independent thinker. It's fine that you're learning from me or anyone else that's profitable and consistent and has a sound logic, but you still have to, at some point, make it your own. And there's nothing inherently wrong about that. You're not trying to reinvent the wheel. You're not trying to repackage the person. Now, I don't view it as someone repackaging what I teach. I don't like it when they rename things and try to sell it, because that's obvious then. But for you to learn from me and then say, okay, he taught this, but he didn't put it in this order or refer to it on this time frame in this type of condition and this economic climate with the calendar. But I see this repeating over and over and over again. So should I ignore that because he didn't mention it as my mentor, or because I see something going on there? Should I log that and continuously mine that to see if it's going to be something fruitful? If you don't do the latter, You're cheating yourself of your own individual model that brings in your own personal personality, and that's making it your own. I try to cover everything. And a lot of that is going to be the things that you don't feel are valuable right now. Managing losing trades, how to avoid market trading environments that aren't going to be favorable, because you're wired to think, what? Go, 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 baby. Push the button, push the button, push the button. Well, I believe I'm better than the average bear. But if I go in every single day wanting to just simply push the button, I'm not going to have the results that I want and that would otherwise be expected of someone in my position, because it's important for you to know where your limitations should be, why it's beneficial for you to not want to do something every single day, because it's more profitable to do that. If you can avoid the times when you're likely to have adverse results, you are ahead of the game. And I mean across the board, because everybody has a way of making money. You can make money with Elliott Wave. You can make money with supply and demand. You can make